Hello everybody! So in this class we are going to learn what is a balance sheet. Before we start looking at the balance sheet itself, we need to know and understand the fundamental account equation, because this equation rules the structure of the balance sheet. The fundamental account equation says that assets are equal liabilities plus owner's equity. Now let's understand each part of this equation, starting by assets. Assets are things that the company owns. They are resources of the company that have been acquired through transactions and have future economic value that can be measured and expressed in dollars. We can have tangible assets that have a physical form, such as buildings, machines, inventories, facilities, but we can also have intangible assets, the ones that are non-physical, and usually they are very hard to evaluate. An example of an intangible asset is the trademark of Facebook. It is not physical in nature, and it's very hard to measure, but certainly it has a great value for the company. Usually intangible assets are not listed on the balance sheet, but they are considered to calculate the value of a company. Now, let's take a look on liabilities. Liabilities are obligations of the company. They are amounts owed to creditors for a past transaction. So, for example, imagine that a company gets a loan from a bank to purchase machines or new buildings that will become new assets. Now this company has an obligation. It has to pay back the bank. So besides increasing its assets, the company owes money to a creditor, which increases the liabilities, respecting the fundamental account equation. Other examples is when a company buys raw materials from a supplier. This raw material becomes an asset, but the debit the company has with the supplier becomes a liability that has to be paid. Usually liabilities have the word payable in their accounts title. At last, we have owner's equity, which represents the difference between assets with liabilities. That's the same to say the difference what a company owns with what a company owes. And this number represents the net worth of a company. Basically, owner's equity also represents the amount of money investors put in this company and how much this company has generated so far, presenting its accumulated profit or loss. So now that we have a basic understanding of what is an asset, a liability, and an owner equity, and have in mind the fundamental account equation, we can analyze a simple example of a real balance sheet. In the top of this balance sheet, we have assets, and at the bottom, liabilities and owner's equity. Let's take a look on assets first. They are divided into current and fixed assets. Basically, current assets means that those assets can be converted into cash within 1 year in the normal course of business. And fixed assets are the ones that cannot be easily converted into cash. So the assets are allocated in the balance sheet according to its liquidity. It means how quick the assets can be converted into cash. Now, let's take a look at liabilities. We have the same structure. Current liabilities to obligation that can be paid off within on average 12 months, and long-term liabilities that take more than a year to be paid. So they are also allocated according to how quick a liability can be paid off. Finally, let's take a look in the total assets amount and compare to the total liabilities, more owner's equity. We see that they are equal, which indeed respect the fundamental account equation. Thanks for your attention. I hope you had enjoyed this class.